scoured all of the property assets, art property, commercial real estate property, every form of property. And then we scoured all the commodities, and we considered every form of commodity from gold to silver to soybeans to oil to natural gas. And then we considered all the crypto assets. And at the end of the day, we concluded that Bitcoin was the best. And we made our decision. We've been executing the strategy. Since then, we've spent thousands of hours studying every development in the crypto ecosystem, every development in the Bitcoin ecosystem, all the macroeconomic, all the political, all the regulatory moves. My conviction today and my comfort and confidence today is stronger than it was in August of 2020. It's gotten progressively stronger each year. And so I don't see anything that's a threat on the horizon at this point.
MicroStrategy founder and former CEO Michael Saylor would have to have one of the most unshakable convictions in Bitcoin in the entire space. Not only has Saylor personally invested hundreds of millions of dollars into Bitcoin, but his company, MicroStrategy, has over $4 billion worth of Bitcoin on its balance sheet, equating to over 140,000 individual Bitcoin. Saylor was one of the keynote speakers at this year's 2023 conference, and afterwards he joined KitCode News to discuss his outlook on Bitcoin over the coming year. Within the interview, Saylor spoke on what was his epiphany moment for Bitcoin and why he decided to go all in on Bitcoin as opposed to every single other asset. If you have ever doubted your Bitcoin investment or been unsure of its future, Saylor's explanation will surely change your mind. Make sure to stick around to the end of the video where Saylor gives his outlook on markets and why he is going to stick to his Bitcoin strategy no matter what. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind.
I think during the COVID lockdowns, when the interest rate went to zero, it became clear that if you had hundreds of millions of dollars earning 0% short-term interest rate, it's not an asset, it's a liability. $500 million held for a long period of time when the inflation rate is 20% and the interest rate is 0% has a negative real yield of minus 20%, which means that your $500 million is worth $400 million 12 months later. So in a world where the monetary inflation rate is greater than the discount rate offered by the central bank, in that world, if you have positive working capital, if you have $1 billion in your treasury, when the negative spread is minus 10%, you're losing $100 million a year. So in that world, you can't rationally have a positive treasury balance. You need to have negative working capital. So in a world of consistent monetary inflation and low interest rates, the rational thing to do is to do an LBO and go into debt and actually not hold $1 billion in capital, but rather borrow $1 billion in capital and have a razor-thin margin of $10 or $20 million. The problem with doing an LBO and borrowing billions of dollars so you have negative working capital is the Toys R Us problem, which is eventually you have a bad quarter and you have no capital, so you go bankrupt. So it's like with your family, if I said all of your assets are being inflated or devalued, debased every year, and you go, well, my great solution is I'm going to give up all my family's assets, borrow as much money as I can, and then one day you're not going to be able to make the mortgage payment and all your kids are going to starve. So the epiphany of 2020 was the only path forward. There's two paths forward. Either I have to impoverish the company by loading it up with debt and we're going to eventually trip and die, and that's why the mortality rate in all these LBOs is 99%. They all go bankrupt and they're torn to pieces, and it's bad for the employees, bad for the customers, bad for the shareholders. Or the other possibility is I have to convert my treasury into an asset that cannot be debased by the government. I have to have tangible assets. So if you have $500 million, are you going to buy $500 million of buildings or oil rights or timber or coal or soybeans or gold or Bitcoin? And I looked and I said, well, I can't find $500 million worth of art to buy. Art's a store of value, sort of inflation hedge. If you held it for 100 years, it's worth more today than it was 100 years ago. You can't say the same for the dollar. So I can't find art to buy. I can't, do I buy land. I can't find a portfolio of $500 million commercial real estate to buy. It was all overvalued. Can you buy the S&P index? No. The problem with the corporation is accounting rules and law requires that no more than 40% of your balance sheet be invested in securities. There happens to be a carve-out to hold treasuries. Although treasuries are technically securities, they're deemed as property or commodities in the accounting profession for that purpose. But I just couldn't go buy the index. And if I did buy the index, the problem with that is the typical investor would say, why did you buy the S&P index when I could buy the S&P index? So you're not really adding value to an investor. So the question is, what is the most valuable king commodity that you can buy that's property and not a security, that actually adds value to an investor, that can reasonably be expected to appreciate in time as the dollar is debased? And that got me looking for either gold, like gold is sound money for 5,000 years, or Bitcoin, and I concluded that crypto gold was better than gold. If I could create a gold network with 21 million gold coins, if I could make it illegal to mine any more gold, if I could make it possible to teleport the gold, if I could make it possible to program the gold at 1 million cycles a second, that'll be better than gold. So I thought, well, I guess theoretically we could create that. And what happened in the crypto world is they created a form of crypto gold, a pharmaceutical grade synthetic gold, but it's faster, smarter, stronger than gold. All of the advantages of gold, a bearer instrument with no counterparty risk that's a non-sovereign store of value, those are the advantages. None of the disadvantages of gold. It's expensive to move, it's centralizing, people can steal it from you, and gold miners keep debasing it by making more gold. So once we saw that, we said, okay, crypto gold looks better than soybeans, looks better than real estate, looks better than gold. What's crypto gold? Is it Bitcoin or is it some other crypto asset? And after studying all 10,000 of the crypto assets, you could start with the top 100. You concluded Bitcoin's the most decentralized. Bitcoin didn't have an ICO. Bitcoin didn't have a pre-mine. Bitcoin isn't controlled by a corporation. Bitcoin isn't controlled by the core devs. It isn't controlled by the Bitcoin Foundation. They fought a civil war over the future of it. People that wanted to corrupt it or change it lost the civil war. You got a winner. And so the provenance of Bitcoin indicated that it is, and truthfully, the digital synthetic successor to gold. And then the conclusion is, well, if Bitcoin works, then gold won't. Because every intelligent person with money has to choose one or the other. And so if they choose Bitcoin, Bitcoin is going to appreciate at a faster rate. Gold is going to fail. Eventually people will sell all their gold, they'll buy Bitcoin, and not only will you not be successful holding gold, you'll lose all your money to buy gold. Hence, we would have been up 1% if we bought gold, and instead MicroStrategy was up 140% to buy Bitcoin. So that was our epiphany. And to put this in perspective, MicroStrategy had a $600 million enterprise value in the summer of 2020, and today it has a $6.6 billion enterprise value. So the enterprise value increased by a factor of 10, our market cap increased by a factor of 4, and we went from having a $500 million dead money asset, a liability on our balance sheet called the US dollar, that was always going to yield less than the inflation rate, to $4 billion plus of a digital asset, which is appreciating 50% a year for the past 3 years. So we transformed our company. In essence, you could call it a digital REIT of sort. Like, we basically backed it with billions and billions of dollars of a digital scarcity. And instead of having to basically give all $500 million back to the shareholders in a buyback, or do an LBO where we decapitalized the company where we had no assets, we flipped it such that today we have billions and billions of dollars of assets, and we're the best capitalized we've ever been and financially the strongest. And that in that journey, the market cap increased by a factor of 4. The asset base increased by a factor of 8, and the enterprise value increased by a factor of 10. And of course, we found an institutional purpose. Right now, MicroStrategy is in essence providing a security backed by Bitcoin that allows an institutional investor in a matter of 30 seconds to buy $10 million of exposure. And in the absence of MicroStrategy, that investor would take 3 to 5 years to go through the process of vetting the custodians, the exchanges, changing their charter, and reconfiguring their organization such that they could actually invest directly in a commodity.
So there's Michael Saylor on his aha moment and why he has such an unshakable conviction in Bitcoin. And if you still have your doubts, perhaps this will help your own conviction. Many only know Saylor from his foray into Bitcoin. However, Saylor first made huge amounts of money from identifying a different type of exponential technology and going all in. At the beginning of the internet, when companies were first finding their way in the new digital world, Saylor recognized just how big the internet and mobile technology was going to be and made early investments into companies such as Facebook, Apple, Amazon, and Google. Saylor had such high conviction in the space that he wrote an entire book called The Mobile Wave, which was him attempting to convince everyone that this was a generational investment opportunity. Now with hindsight, we can see that Saylor was 100% correct, and he hasn't gone in on another technology until now, Bitcoin. But what do you guys think? Do you think Saylor just got lucky the first time around, or do you think he knows how to spot the exponential trends and generational investment opportunities?